Welcome to The Explainer. So today, we're going to break down a really popular and sometimes pretty controversial tool for looking at the financial markets, technical analysis.
You know, if you've ever looked at a price chart, it can just look like a total mess, right? All those wiggles and jiggles. So the big question for any trader is always, how do you find some kind of order in all that chaos?
Well, one really popular answer to that question is this framework called technical analysis. And the people who use it, technical analysts or technical traders, they believe all the clues they need are hiding in plain sight, right there on the chart.
So what is it, really? At its heart, technical analysis is all about studying what prices did in the past. The whole idea is to use that history to get a better handle on what's happening right now and maybe get a sense of where things could be going.
This whole way of thinking, it really just rests on two simple but super powerful core ideas.
Okay, so the first big idea is this mantra. It's all in the charts. What that really means is that any and all information, we're talking everything from big economic news to a company's earnings report, is already baked into the price you see.
And the second big idea? It's that old saying, history tends to repeat itself. The thinking here is that since markets are driven by human beings and our psychology doesn't change all that much, the patterns we saw in the past are probably going to show up again in the future.
Okay, so if it's all in the charts and history repeats itself, how do technical analysts actually use that? Well, it all boils down to one thing: patterns.
This is why analysts are glued to their charts, right? Because they are the absolute easiest way to spot these patterns visually. So when they see a chart setup that looks familiar, they think, hey, I've seen this before, and use that to form a trade idea, betting that the price might act in a similar way this time around.
Now this is a really important point. Technical analysis is not about having some magic crystal ball that can predict the future with 100% certainty. Nope. Instead, it's all about playing the odds. It's about studying those historical patterns to figure out the possibilities, the most likely scenarios for where the price could go. Think of it as a game of probabilities, not prophecies.
And this whole approach, it's not just people pulling ideas out of thin air. It's actually guided by several key philosophical principles.
Yeah, this really lays out the foundation. You've got market efficiency. That's the idea that all the news is already baked into the price. Then there's crowd psychology. That's what creates trends, right? People's emotions. Of course, history repeats itself is in there. And this cool concept of fractals, where you see the same patterns on a 1-minute chart as you do on a 1-year chart. The whole thing is driven by probabilistic thinking. Again, it's about odds, not certainties. And finally, adaptive markets, which just means, hey, things can change over time.
Okay, and this is where things get kind of meta. When you have thousands, maybe millions of traders all looking at the same chart, waiting for the same pattern, well, what happens when they all act at once? Their buying or selling can actually push the price in the expected direction. It literally becomes a self-fulfilling prophecy.
But okay, even with all these principles and self-fulfilling prophecies, there's a huge catch. It's not nearly as straightforward as it sounds. And here it is. Technical analysis is way more of an art than it is a science. It is super subjective. I absolutely love this comparison. Seriously, you could get 4 of the best traders in the world. Let's call them Michelangelo, Donatello, Leonardo, and Raphael. Have them look at the exact same chart, and I guarantee you they could easily come up with 4 totally different ideas about where the price is headed next.
So, I know what you might be thinking right now. You've heard all these crazy words like Fibonacci or Bollinger Bands, and it's easy to feel like, whoa, this is way too much.
But seriously, don't get too worried about all that for now. The main thing, the most important takeaway, is just to get these core ideas we've been talking about. You're just using patterns from the past to figure out possibilities for the future.
At the end of the day, technical analysis is just a tool. That's it. It's designed to help you make more informed choices, to move the needle from pure chance over to deliberate choice. Which leaves us with one final thought. How will you choose to read the charts?